Most financial advisors are skipping this one step, not because they forgot, but because it reveals the flaw in their entire strategy. Now listen, I should know. I used to be a financial advisor. I did that several years ago, and I didn't even realize what was missing. Now stay till the end because I'll also break down what happens when you invest $1 million the traditional way versus the cash flow acceleration way. Now before we get there, let's zoom out and talk about the 5 things they're supposed to help you with. First, they review your investment portfolio. 2, they have you take this risk questionnaire. 3, they have you invest according to that risk level that you supposedly filled out. 4, they tell you how to dollar cost average and set it and forget it and all those kind of things. And then the 5th thing is a review with you each year to tell you to keep putting in more money. But here's the truth, giving your money to a financial advisor might feel like it's responsible, but it usually works against you in 3 big ways. The first one is your money is in prison. Think about this, if you have an emergency, you typically cannot break into your IRAs and 401ks, at least not without getting big penalties, taxes, and things like that. Now, they want you to lock away because they make money one big way, and this is the second point right here. They earn commissions regardless of the performance. They make money off of your money under management. They call it AUM, or assets under management. So think about this. If the stock market drops 20%, you have $1 million, your $1 million now becomes $800,000. You've lost 200 grand. What do they lose? Nothing. Where you lost money, they just lost a little bit extra income, but they're still making, say, that 1%. They just went from $10,000 a year to $8,000 a year. Whoop-de-doo. They still get paid even when you've lost money. And that's one of the biggest flaws that I found when I was a financial advisor, is that I was getting paid regardless. In fact, the best person that made money on investments was not the investor, it was not the client, it was the financial advisor. Even though all they literally did was probably just assess your risk and say, hey, you're a moderately aggressive risk tolerance, therefore here's this moderately aggressive portfolio. Here's your little box to jump in. That's it, right? I just spit on my board here. Here's the problem though. The stock market is completely unpredictable, and that's the third point. They don't know what's gonna happen. They can't predict the future. I was even a stock trader, guys. I actually know more about the stock market than most financial advisors, yet even I can't predict exactly what the stock market will do. Yes, I know over time it'll go up, right? This is why you'll hear advisors say things like, you got a dollar cost average, just keep putting money in. By the way, isn't that the most brilliant marketing strategy ever? To tell you to keep putting money in, whether it goes up or down. In fact, if it goes down, put more money in because you're buying on sale. Well, if you're so brilliant, Mr. Financial Advisor, why don't you just tell me where the market bottom is, and I'll buy all that money there. I'll put it all there, get all my money, making money there, because when it goes up, I make way more money than buying all the way up, because you keep telling me to keep buying all the way up too. That's the problem. It's unpredictable. They don't know what's happening. They're blind to it. You're blind to it. It's the blind leading the blind, and you hope that it works out somehow. Now, to see how really bad this can be, let me show you something that no financial advisor will ever really show you, at least not honestly. All right, so here's an example. I had a client here that he got to retirement. He had exactly $1 million, right? The advisor says, okay, well, you got $1 million, you can now live on 3% per year, which means he can now live on $30,000 per year, right? That's it. Now, of course, this guy lives in California. He says, there's no way I can live on $30,000 a year. And by the way, I'm a millionaire. Should I be living like a millionaire, not living like I'm below the poverty line? And he says, well, that's just what it is. Now, some people will say you should have the 4% rule. You see that all the time, that 4%. People's like, you can live on that. That's not true. And there's even people that tell you higher, like 8%, like Dave Ramsey.
If you think you can only pull off 4% off of investments making 12, where the flip is the other 8% going?
Do not believe it. 3% is actually pretty accurate. Unfortunately, that's just not enough, is it? So he started to look for answers. He said, well, what do we do? Because I know there's got to be a solution here, but I don't know what it is. And so he started looking at different podcasts. He found our podcast, the Money Ripples podcast, which, by the way, subscribe if you haven't already. So he says, okay, this looks better. Let's do something more with the alternative investments, things like real estate-backed investments versus unpredictable stock markets that are kind of like your crazy ex-girlfriend. They're bipolar. It's exciting. It's sexy. But at the end of the day, it's just way too crazy to deal with, isn't it? Well, he didn't want that crazy, so he said, all right, let's take your $1 million, but instead of investing just for living on less than the interest because of inflation and everything else, what if we generate real income? This is the big thing that financial advisors are missing. They never really get into the income side. How do you create cash flow from this? Passive income. So I showed him, I said, listen, if you got this $1 million, we can diversify into different things. And with all the different diversification, he did things from duplex rentals where somebody else manages it, so he's hands off. He invested in a multifamily apartment building, which was with other investors where they pool their money together. It's called a syndication. He did some oil investments, oil partnerships, where again, they were cash flowing from all the drilling they were doing. And as a result, his income now got up to over $100,000 a year. Some years is like 120, 130,000, depending on oil prices. Others is at least 100,000 a year. Way better than this little measly 30,000, right? That's the thing they never really address, is how do we create income today? I call it present planning versus just future planning, right? It's always about someday with financial advisors, but what about today? What about my life now? You're told to sacrifice and slave and save away all this money away from your family, away from your life, away from your lifestyle, so that someday you might have something. And then look at what you have. You have $30,000 a year versus if you could invest that today, what if that could be $100,000 a year right now that benefits you right now? So the next question is, how do you start investing in cash flowing assets? So I'm going to show you in this next video. I'll break down exactly where to start, even if you don't think you have enough money yet, and how to turn your hidden resources into real passive income. Click and watch that video right now.